Dear friends, welcome to weekly view on markets. This week Nifty and Bank Nifty lost 2.9% and 1.3%, while mid cap and small cap indices lost more than 5% respectively. I have looked at the charts. Charts do not look good, and mid cap and small cap stocks have retraced gains of last 1 year. That means the yearly return has become zero for mid and small cap indices. Markets had gone up in expectation of GDP growth of above 7.5% beginning of last year and strong earnings from the companies. So there has been a setback on these both fronts. GDP growth has slowed down. Quarterly three results were lackluster from companies, and also there is near-term earning visibility is not very clear. Hangover of trade war and emerging geopolitical situation globally is also posing a headwinds for the markets. Markets are set for some more consolidation and correction under these conditions. There may not be immediate recovery in the market, but market has corrected now by more than 20%, and definitely it is a good time to invest. Staggered investing is suggested. Mutual fund SIP investors need not to worry about the correction as they will benefit from the correction by accumulating more units at lower levels. Long-term prospects for the investors remains good. There is a short-term pain which investors have to take up, but this is the process of investing in the stock market. Stock markets by nature are volatile. They give very good returns in the long term, but short term volatility and correction is part and parcel of market behavior. Investors have to have patience and they should remain invested. They will get good returns in the long term. Now let us look at performance of various indices. Nifty has closed at 22,124. It has lost 671 points, that is 2.94% loss during this week. Bank Nifty has closed at 48,344. It lost 636 points, closed at 1.30% loss. Mid cap index lost 2,571 points, that is 5.09%, closed at 47,915. Small cap index has closed at 14,700. It has lost 936 points, that is a loss of 5.99% or almost 6% loss. India VIX is at 13.91. There is a fear in the market and investors have been selling. We are almost at the last leg of correction, it looks like. I have looked at FII and DII data. DIIs are buying more than FII selling. Even then, market is going down. So it is the selling by HNIs and retail investors. So a panic has set in the market. We have seen heavy selling, especially in mid cap and small cap sector, where retail investors and HNI hold major positions. So all these data indicates to me that somewhere we are near the bottom. Another 2%, 5% correction may be there, but somewhere we are near the bottom, and soon market is likely to bottom out. But we cannot expect a quick recovery as earnings growth and clarity about GDP growth is not very clear as of now. So markets may take some time, consolidate at lower levels, then we will see the bounce back. Now let us look at performance of various sectors. All the sector ended in loss during this week. Information technology lost more than 7%. Media companies lost more than 7%. Public sector companies lost almost 6%. Realty sector lost more than 5%. PSU Bank lost more than 5%. Energy stocks, oil and gas, auto sector, manufacturing, metals, commodities, infrastructure all lost between 4 to 5%. Remaining sector lost 1 to 3%. There was no sector which was spared. So this kind of heavy selling in all sector indicates to me that we were somewhere near to creating a panic bottom. Now let us look at technical charts. This is the daily chart of Nifty index. I had drawn this support line earlier. This support line is broken and Nifty has closed below this. The next level of support for Nifty is at 22,800. I am expecting that this support level should hold for Nifty. But when there is a panic in the market, all supports could be broken. So we'll have to wait and watch. This is a daily chart of Nifty mid cap index. Here also earlier support level has been broken and Nifty mid cap index has closed below this support line. The next level of support for Nifty mid cap index is at around 46,000 levels. Whether Nifty mid cap index will hold this 46,000 level and bounce back is to be watched in the next week. This is the daily chart of Nifty small cap index. Here too we see the major support level has been broken. It has closed below the support level. Next support level is at around 14,300 for Nifty small cap index. Whether this support level will hold, we need to watch in the coming week. Very difficult to say which support will hold under the panic circumstances. Technically, there is a panic in the market. Fundamentally, there is no clarity on the earnings of the companies or about the GDP growth in the coming quarter. Because of all these factors, and also adding to this is the geopolitical situation like the trade war, which is started by Trump administration. All these put together, there is no clarity. When the clarity emerges, the market will definitely bounce back and will take a direction. We'll have to wait and watch for few more weeks. Now let us look at some of the market fundamentals. Indian macroeconomic parameters continues to remain good. GST collection for the month of February 25 has come at 1.83 lakh crores. It is up by around 9.5% year on year. RBI Forex Reserve is at 640.47 billion US dollars. It is down by $4.7 billion during this week. Foreign exchange rate has crossed 87 and it is 87 rupees 21 paise per dollar. So rupees weakening continuously is a concern. Dollar index is at 107.5. So dollar is strengthening against all major currencies, including emerging market currencies. This is one of the factors for weakening rupee. Brent crude price is at $72.81 per barrel. A lower crude price is definitely good for Indian economy, for Indian markets. It will help to reduce the inflationary impact on Indian market. Gold price is at 86,620 for 10 grams 24 carat. Gold price has shot up in last few months considerably. When geopolitical situation becomes clear, the gold prices either will correct or likely to consolidate between 85,000 and 90,000 for a longer period of time. Generally, gold return is almost equal to the inflation, and since gold has given good returns in last 1.5 2 years, it is likely to consolidate for a more longer period of time at these levels. FIIs have sold 22,011 crore, which is a huge amount during this week. It is matched by DII buying. They have bought 22,252 crore in equity this week. When DIIs are matching FII selling, why there is such a big correction of more than 5%, especially in the broader market like mid cap and small cap? This indicates to me that the retail investors have got into panic and they are selling off their stocks. The market theory says that when a panic selling happens in the market, that is the time the market forms a panic bottom and it will build a base. From there, the next leg of rally is likely to start. But having said this, will it start immediately? I don't think so because the fundamentals are not supporting. The valuation is still premium. It is not quite attractive valuation. The present level for mid cap, small cap indices, and there is a slowdown of earnings growth of the companies. Considering all these technical and fundamental parameters, I feel it will take few more months for the market to form the bottom and then start recovery. GDP earlier estimates were above 7.5%. Market has run up in expectation of high growth, but the slump in growth has resulted in market correction, adjusting to lower growth levels. Earnings growth of companies is clouded by trade war and geopolitical developments and slowing Indian economy. So all these put together explains the current market scenario. Unless the earnings of the companies pick up, we may not see significant upside. Correction and consolidation may continue for some more time in the market. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions. We will meet again next week. Thank you.